Good morning, everyone. Happy to see you here, and I'm sure most of you would be from the insurance industry, right? Okay, great. So we have some time. I suggest we start with the round of introduction very briefly, each one of us, starting from this side. Yeah. You have a mic there?
So Ayandev Saha, I work with Dastur Reinsurance Brokers, and I've been actively involved in this microinsurance space for past 10 years in designing of microinsurance programs. You want me to continue with the introduction? Yes.
Hi everyone, I'm Neeraj Maheshwari. I'm currently working with DHFL Pramerica. I'm heading group and partnership distribution. I've been involved in microinsurance for around more than 11 years now. Thank you.
Hi, I'm Sanjeev Mantri. I've been with ICICI Lombard for almost a year and a half. Prior to that, I've been in banking for almost 20 years.
Good morning. My name is David Dror. This is, I think, my third incarnation in insurance. I first worked for many years with the ILO social protection sector, mainly on health insurance in developing and emerging countries. I then was a professor at Erasmus University Rotterdam on health economics and health insurance. And in 2007, I established the Microinsurance Academy in New Delhi. It actually services other countries as well, but we have only one office, which is here in New Delhi. And the Microinsurance Academy deals with health risks, crop risks, livestock risks. We have flirted a little bit with life, but not very much. And we are very much into climate change related risks at rural areas.
Hi, my name is Khalid. So I've been in the life insurance industry for a decade or so. And currently I'm working with PNB MetLife as the head of products, which involves designing all the new products, doing the actuarial pricing, engaging with the regulator, and then going ahead and launching and managing these products which are part of the portfolio of PNB MetLife. Yeah, thanks.
Thank you. And I'm Amit, Arora, moderator for this panel discussion, and I'm not from the insurance industry. That's why I get to ask the questions and not answer them. But partly I've been involved on part of the World Bank with some rural development projects, which includes insurance risks, rural risks, including farm risks. So I guess now we should start with the panel discussion. I was in the other discussion earlier today, and the central theme of all the discussions in yesterday has been hovering around digitization, demonetization, and all that the country is going through. So very quickly, just wanted to have your feel before we get into the technical discussion. Has this industry been affected by this last 3-4 weeks even in terms of business? You see any midterm challenges also emerging because of that, starting with the distribution business?
Yeah, if you ask me, the upfront answer is yes, especially if it's a time for the premium renewal. And also, we were also trying to implement some of the PMFBY scheme, where we are working with the farmers, where they need to contribute. And especially these are the farmers who are not the loany farmers, non-loany farmers. And if you ask me, there is, so they need to contribute, and they're asking for an extended timeline. So this is upfront if you ask me from the ground zero. Even if they have, I think, so another point might be you can look into it, whether they are really asking for some more time to pay or not. But from a distribution side, yes, there has been request, of especially on those renewals which are due for this month, or if any new program.
Neeraj, sales?
So yeah, definitely. I think my largely businesses depend on my third-party partners, and most of the partners have, be it microfinance, which is really largely impacted due to the collection and disbursement, both. Be it the banking said, okay, sorry, we have other priorities other than insurance now. So definitely, I think the business has been impacted by large. So overall, yeah.
Khalid, your take?
Yes, I agree with both the other panelists here. Just to add to Ayandev's point on renewals getting impacted, one of the things which the regulator has done recently and I think that's a very good step, is for this year, taking into account the fact that it's challenging, it's a challenging environment. They've actually helped increase the grace period for renewal of insurance policies. Usually for any insurance policy, the grace period is a period of 30 days within which the customer has to pay the premiums, else the policy would lapse. In the current context, the regulator has given a 6-month window for customers to come back and pay premiums, and I think that's a very, very good measure that the regulator has taken recently.
So somehow salvaging the situation.
Yeah. So the business has got impacted. Clearly, a lot of general insurance industry depends on motor, which includes private car, two-wheelers, and commercial vehicles. And there, the impact has been pretty sharp. The new sales, which was going through a very robust period in November, has seen a clear, October actually seen a clear bit of a stifling happening in November. We've seen two-wheeler sale going down by 30 to 40%. We've seen private car sales also going down almost 15 to 20%. There has been an impact, but I think it's, in the overall scheme of things, it's a small price we all need to pay probably to see that things get better as we keep moving in. So impact was expected, it was inevitable, but at the same time, I think in the long term, we would continue to be bullish as far as the whole in general insurance market and overall the motor scenario is concerned. Yeah.
Dr. David, from your perspective, little going beyond the immediate impact, do you see any silver lining because of this in the sector?
We work in several locations in rural India, in Bihar, in Maharashtra, in certain parts of eastern UP. We used to work in Orissa and in Chhattisgarh. At village level, at community level, there is no demand for financial inclusion. There is demand for financial protection. But the fact that people would get a bank account in a non-local bank, which is in a city 20, 40, 60 kilometers away, is not something that people stand in line for, is not something that people are keen on, and they don't see the advantage. The demonetization is a different story from the digitalization. In the microinsurance schemes that we curate, most of the payments of premiums are and have been cash. The premiums were around 350 rupees per person per year. In other words, less than 500. And 500 is relevant for the demonetization. So people in any case paid in smaller denominations, and most of the payers were women. Now, we have not had any particular impact of this, and we have never had, anybody coming and saying, I would rather pay with a mobile phone than in cash. So the idea that you would have a point-of-sale transaction electronically at village level is, I think, still quite far away and is not going to be without cost. Cost of transaction, cost of familiarizing people with it, building the trust around it. So if anything, initially it would reduce the likelihood of bringing microinsurance rather than increase it or facilitate it.
Thank you. Just to take forward your first statement, there's no demand for financial inclusion. In today's situation, that's a hard-hitting statement. So, but I'll take that thought forward. We've currently going through a phenomena where there are universal mandates, whether it is bank accounts, insurance, life, general. And this is something which I would like each one of you to share your perspective. How effective is that in terms of business and also in terms of being more need-centric? What I need and what I'm getting, because everybody is getting the same thing and there is a huge supply-side push. Is that useful, or how useful that is, especially in the rural context? So Sanjeev, we'll start with you since you are the largest private sector player on this.
Yeah, okay, fair enough. So the way you look at it, probably I'll go back to my banking days. So the last 3 years of my banking days, I was taking care of the rural portfolio for ICICI Bank and was very extensively involved in the exercise of opening Jan Dhan account, which is the banking account. I was as much a part of it as was the whole banking system. And to be very honest, it was a very perplexing exercise for me also personally as I was heading that business. There was, I think, millions of dollars of amount being spent and the accounts were being opened and not much was happening in those accounts. Most of the accounts that we were opening at that point of time were zero balance. But there was some method in the madness, and my own conclusion is, as the harder stand which has been taken on the demonetization side, the gradual shift would have taken a lifetime and maybe would have never happened. To make that happen, something abrupt was required. What could have been done? The jury is out and probably will know how this all pans out. From our perspective, on a general insurance side, or probably on the overall insurance side, if you look at the macro numbers at the Indian level, probably we have a penetration of 3.5 to 3.6%. It's not that bad if you compare with some other BRICS nations as far as we are concerned. But that being said, the per capita expense that is done on the premium is not more than $55, while it gets into a $250 to $300. Clearly, from our perspective, there is a connection between the purchasing power and people seeking sustenance. The purchasing power of the countries which have better purchasing powers, people's ability to seek protection on multiple count increases. Let's look at 2 or 3 things which are very critical. From a health perspective, if you look at it, health insurance in this country, only 20% of the 1.3 billion population that we have got health protection. And out of that, 20%, I'm talking 80% is account of the basic protection which is coming to RSBY, the basic 30,000 scheme. That is all we have got as protection, and there is fair amount of subsidy that is being doled out. Still the inclusion, the so-called micro protection, the micro insurance piece is not taking place. Another classical example is crop protection. Almost 13 crores, 130 million people in this country are into farming, of which probably roughly around 5 crores, which is 50 million, do by taking loans from the bank. Another 80 which are not even taking loans from the bank, and they are non-loany farmers, the so-called non-loany. If you look at the loany farmers itself, where protection was being given in terms of crop insurance, the penetration has not gone beyond 60%. Oh no, that is appalling. The new scheme which has been put in place clearly has done away with the subsidy that comes along with it. Still, when the Kharif season, where the planting has taken place, the part of the protection being sought has not gone beyond 60%. The penetration has increased from a 25% to 30%. Here comes the question which I think all of us need to look into. Why is it that when such highly subsidized, consistent policy, in the new policy it has been agreed that farmer is expected to pay not more than 2% of the premium, and for Rabi he'll pay not more than 1.5%. The unpredictability part has been removed. The sum insured part which used to get managed by reducing it if the cost was going high for the state and the central government also has been taken care of. Still, penetration has not gone up. My own belief is there is something which is missing. Maybe it's some sort of claim settlement where there is a challenge where we as insurers need to play a larger role. Maybe we need to smoothen the process. The role of technology has to come in play to avoid any moral hazard to subjectivity that comes in settlement. In my eyes, clearly from an insurance perspective, if I look at it, we will have to play a far more proactive role to see this happens. If you ask me if I'm well off as an individual, I can still live without protection. For a country where 25% of the people are below poverty line, it is important that they get protection, they are taken care of. Their level of awareness, their level of, rather than level, their ability to get themselves serviced in case of challenge, how can that be addressed, has to be taken care of. I think to me, that is the core issue. And once the experience of the customer increases, even at that level, the word of mouth will play a very significant role in increasing the penetration. That's what my overall views are.
Thank you. Dr. David, we've had some discussion on this briefly, and you've seen other markets also. So it'll be interesting to hear your take on this.
I could align with very many things that you said, Sanjeev. I think that there are 4 fundamental dampeners that stand in the way of scaling microinsurance. First of all, linking insurance to mandating, to an obligation, is more of a problem than a solution. In a country where it is impossible to implement any mandate, to mandate insurance is not a help. If you look at how many vehicles are actually insured, although there is a mandate to do it, you know that there is a problem. if you think about implementing or mandating and implement in rural India, 70% of the population, but there is nobody to mandate it other than the society itself, the community itself. So if the community doesn't buy into it, forget it. And it may sound shocking in this context, but for people who work in rural, as we do, and as many of you do, it will not come as a surprise that unless the government gives something, very many farmers view the government as much as part of the problem as the solution. They're afraid of government. So if government doesn't give them anything, they would rather not have anything to do with government. Mandating is not part of the solution. Mandating needs to give something and it comes. The second strategy, which also has come to its end, is subsidies. 75%. RSPY is an example. It is fully paid by the government. The results, fully paid, I think, the premium is fully paid by the government, state and central. And whether this is the best use of money in terms of impact, in terms of return on the money, is an open debatable question. There are quite a number of papers. I have published one myself. This is not the main story for today, but it's definitely not that subsidies are the solution. 2 more points, then I'll stop. The third point I'd like to raise, and you can even refer to the New York Times. Yesterday's editorial in the New York Times was, one size does not fit all in health insurance. Of, let's say, 20 minutes. Some don't. So what use is it to give them hospital insurance when there is no hospital? In the early stages, one state in India, I will not name it because it really would not be fair, gave in their health insurance against Alzheimer's disease. But how many farmers know about Alzheimer's, and how many farmers will actually go and take it? The package has to be relevant for people locally, and they know what they want, they know what they prioritize. So the question of package design is critical. And the fourth point is intermediation and business process. The business process of insurance, as it is practiced in rural, is extremely expensive relative to the coverage. Between the commissions and the intermediations and the back office and the claims and everything else, it is untenable. One publication says that it is 63% of premium. At 30% of premium, I would be happy. And over 10 years, it could come down to 20% or 15%. I would still be happy in micro. But if it's beyond that, it means that the claims will never reach the optimal level of 70%. And if they don't reach that level, people will learn very quickly that this is not a valuable deal and therefore will not come in. 4 issues: mandating, subsidies, package design, and business process. All of them need revisiting if we want to see micro scaled. And just to give the positive side of it, in the schemes where we are working, we do crop insurance with 0 subsidy. Listen again, 0 subsidy in India. People pay not 2%, but the REIT premium, which is around 8%, and they pay it, and the renewal rates have been 70 to 80%. So if we could do it small scale, because we have redesigned completely the package, you can do it too. No mandating, no subsidies, different package design, and different process. We have even published our process. There is all our secrets are in public. If you want it, you can go to amazon.in and find it. And we are very happy to share our information because we would like to see more people insured, even if it initially does not create profits, but it creates welfare. And when there is enough welfare, people will create your profit. Look at Europe. This is how it started. Thanks.
Thank you. Khalid, just to take that thought forward, even if there are mandates, and I don't think in India it's in foreseeable future possible to visualize a situation where mandates we can wish away. given that situation, how does private sector, come into the picture? I don't know how the pricing is also determined because it's not the conventional underwriting process. So, given the price point and the cost of delivery in such mandates, what is the best way forward for government and the industry to work on this?
I think that's a good question. So I'll take the example, given that I've been working in life insurance, so I'll take